Um, if I look at the other box here, one of the things it copes with is the notional rate. So obviously, if you buy things from abroad that were supposed to be standard rated, what you're supposed to do is on your VAT return show the amount that you would have paid in tax if it had normally been charged. So you can see that I've got £3,000 worth of turnover here for EC purchases standard rate, and the actual tax amount is zero. Okay, but the notional rate works out that it's £533.75. So you add that to give you the figure that you've actually got in that box, the 742.94. Okay, we haven't hard coded any of these boxes. Okay, and what that means is you can actually decide which tax codes that you make up go into each box. Now, the great thing about that, a lot of systems hard code their VAT return, okay? But the disadvantage to that is that if you ever get some legislation change, like we just had the reverse charge legislation come out, which means that for people that kind of import or sell mobile phones and electrical equipment, yeah, they have got to they're not going to pay the tax anymore, yeah, but they've got to account for it, and then when they sell it, if it's to someone that might sell it on, they've actually got to account for the tax as well. So it's a bit like the kind of notional rate. But what that means is, with a totally flexible VAT return and totally flexible tax codes, it means that we can cope with that additional legislation issue out the box. It's just create another tax code and decide that we're going to have a notional rate on it to put it into the sales and purchase tax boxes. So I believe a lot of systems are going to have to be rewritten, yeah, or kind of elements of them are going to have to be rewritten to cope with that. But we set off writing this to make sure that if anything came along like that, we could cope with it very quickly and easily. Okay, so if I reconcile this VAT return, okay, and say okay, obviously these little pop-up boxes tell me if I've done something correct or not. And so if I just kind of click on the VAT return again, you can see that I've got that particular VAT return. It's there forever now. Okay, whenever I want to load that VAT return up, I can see that's what makes those figures up. I can reprint the report again if I want to. And obviously, this is a day book summary. I've also got a kind of box summary, and I've also got the actual VAT return itself. So I can, I've not lost it. It's there. I can come back to it. Also, our journals, yeah, allow you, okay, to enter tax type and tax code. Okay, so what that means is when you've got adjustments like, I don't know, VAT scale charges or whatever it might be, yeah, you can actually enter that as a journal and it will appear in your tax return. Okay, so a lot of systems don't seem to let you do that either. Okay. Right, what else have we got? We've got retrospective analysis. So if you wanted to see a kind of debtors and creditor list as of a particular time going backwards, we've obviously we've just seen journal templates. Okay, so multi-currency revaluation. Okay, a lot of systems do not cope with multi-currency very well at all. Okay, or they either become very complicated, yeah, so no one really kind of can get to the nitty-gritty anymore. All right, we only take losses or gains, okay, when transactions are allocated against each other. So in the customer ledger, let's say you had $100 outstanding and that was worth £50 in base currency, and we've got a receipt on there for $100, and that the exchange rate that was put on, that's worth £75. So there's a £25 loss or gain there. Okay, so only at the point, if we put those two on and didn't allocate them together, we wouldn't, it'll be fine. But basically, when we allocate them together, that's when we actually take a loss or gain. Okay, now what that means is though that we do have obviously currency exchange rates going up and down. Okay, and you might want to get a handle on all your outstanding customer transactions, supplier transactions, and your bank accounts in foreign currency. What is their value with these exchange rates? Okay, so that's what this routine is all about. Okay, so if I say get transactions, what you'll see is that here's an invoice. okay, for 150 euros. So all the kind of dollar and euro and foreign currency customer accounts with anything outstanding, whether it be receipts, credit notes, or whatever, yeah, it will all be here. Okay, so that was 150 euros. The original exchange rate was 3, so the original base value of that transaction was 50. Okay, the current exchange rate is 1.5, so the new base value would be 100. Okay, so there's a £50 loss or gain. Okay, now it doesn't change anything to do with that transaction. That transaction will always stay with 150 euros at an exchange rate of 3. Okay, and it will always be worth £50. Okay, we're not writing back journals to the ledgers or anything like that. Okay, this is basically the reason for that is that this routine can be run any minute of the day. I can run it right now, and I can run it in 5 minutes time. Yeah, and I can still post the provisional journals because, it's up to date all the time. Okay, so then here's a list of your suppliers. So if we just look at customer, the total loss or gain on all our foreign currency customer accounts is 141. Same with suppliers. Okay, same with our bank accounts, and this is the proposed journal. So what it's proposing is that we post that to our unrealized loss or gain account, that on the supplier side, these for the bank accounts, and so we have a unrealized currency loss or gain on the profit and loss, and we have accrued foreign currency loss or gain on the balance sheet. Okay, and what it does is it looks at that nominal code and says what's the value of it, and it does a reversing journal, okay, of that amount, and then enters this new revaluation. The reason for that is so this can be run by an end user every minute of the day, and they can prove their foreign currency revaluation every minute of the day. So if I just kind of revalue, yeah, it produces me a report, but essentially that now saves that, and it's posted that journal. Okay, so if I come out of there, okay, and click on here again, it's saved that exactly as it was, but I'm going to say new, and I'm going to just go and set exchange rates. You can set exchange rates in the system manager, but we'll just put the button on here to make it kind of easy. So I know I've got some euro customers, so I'm going to put 1.7 in there. So I know we've definitely got a difference. While we're here, it also it tracks who changed what when. Okay, so let's come out there. So now I'm going to so now you can see it's automatically refreshed the list anyway. So now we can see that 150 euros that was worth £50 is now worth £88.24 at the new 1.7 rate. So you can see that we've actually got a loss here. So when we look at the journals, okay, now it's going to zero. We've already posted £146.23 against the accrued foreign currency loss or gain account and then realised loss or gain account on the profit and loss. So it's just going to zero that. So the 146 is zero it. And then it's going to enter this new journal. Okay, and provisional for that, and we're going to provisionally provision for that £534.95 loss. And that's it. Really simple, really easy. Anybody can come in here any minute of the day and do a proper accrual for their loss or gains on foreign currency. I don't know any system that's as easy as that on foreign currency. Okay, stock revaluation. Okay, now what we did here, okay, FIFO and cost of goods. Obviously, costing methods are average, FIFO, LIFO, standard. Okay, and first in, first out. Okay, doesn't really work that well on most systems. Okay, and the reason is this: is that if you get goods in that have not had a purchase invoice against them yet, okay, you don't know the confirmed cost. And if you sell them before you know the confirmed cost, well, FIFO doesn't work, does it? Because first in, first out, you're supposed to be doing a cost of goods sold, yeah, at the price, at the actual price. Now, some systems are very weird. They kind of hold the real cost of goods sold until you get the bill in, the purchase invoice in. That's when it posts it. But then obviously you have a sale sitting on your profit and loss, but no purchase, no cost of goods sold. Rubbish. Okay, so basically, other systems, they kind of post a wobbly average. Yeah. But what we've done is we've said, right, all our cost of goods sold are going to be